Hello again, traders, and welcome out. This is Ankit from Maverick Currencies, and welcome to the another edition of the Currency Room for the upcoming week of March 12th to 17th. And we'll be taking a look at last week's price action and prepare ourselves for the upcoming week. And oh boy, there's a lot to unpack this week. A lot of movements both in the currency and the equity market. So this was definitely the biggest week percentage-wise across the markets. So looking at the equity markets, the biggest drops in September 2022, percentage-wise, there was a big drop overall. So we are noticing some things changing across the board where everything is plunging lower. I mean, equity markets did plunge lower. Look at the crypto markets, they did plunge lower below that 20K level. So those were sort of big developments last week. And now the equity markets are below the 20, the 50, and the 200. So this is, again, putting a lot of pressure on the equities. And the next upcoming weeks, we could see markets sort of struggle a little bit here as the momentum is turning a lot bearish. Now, in the currency market, we've seen all the big movements happen, not just in the dollar, but look at Swiss franc and yen. They actually gained the most this week. So we have a lot to unpack between what's going on in the US dollar bond market and what the other currencies is telling us. Gold were higher and the yields were lower. So on a week like last week where we definitely seen some bullish reports, that did not result into a further yield strengthening. So I think that was one of the reasons why the dollar did sort of pull back towards the end of the week. So that's something we'll have to take a look at when we look at the reports last week. So starting with the Swiss franc, I mean, this is what really caused that big move or start of that big move in the Swiss franc. I mean, take a look at the inflation. It was much higher than expected. And if you really look at across the board, you know, we have other countries where the inflation is actually ticking lower. For example, Canada or even the US. So this again start to put some bullish bets that the Swiss bank will continue raising rates, or they have to raise rates because of the inflation, and that really caused that big massive breakout in the Swiss franc. That was one of the biggest moves we have seen in the recent months, and that was really fueled after that. After that, we actually had the RBA rate statement on a Monday night, and that was, again, they raised rates, but with the dovish statement. And that's something that we are seeing among all the major banks, that they are either holding rates or raising rates, but the outlook is not as hawkish going forward. I mean, similar thing that we had on Wednesday with the Bank of Canada, they did held rates. They didn't raise rates, and you can see the expectation was to hold rates, and that's what we saw. Didn't really see a big move after that in the Canadian dollar, but there was nothing hawkish to really guide the Canadian dollar higher. Now, going to Thursday and Friday, again, this is where we had a lot of data. So Thursday night, Bank of Japan did not make any change after their policy. So again, it was initial price action was dovish on the bearish side, but then on Friday we did see the yen kind of strengthen further. So that could be just off the back of risk-off sentiment that we've seen on Friday. But let's take a look at the economic report. So the Canada employment report was much better. They've seen a drop in the unemployment rate, and they've seen a drop increase in the employment change. So good report overall, but that did not help the CAD. CAD did sell off, and something we have to take a look at going into next week. Now, the U.S. employment report, let's start to unpack this one, because the employment change, I mean, look at the employment number. We actually jumped from 224 to 311,000. But this is where these two numbers were on the other side. The unemployment rate actually did increase to 3.4 to 3.6, and the average hourly earning rates actually did drop as well. So this is, again, a mixed bag report, but definitely not what the Fed wants to see. You know, the Fed, if the unemployment rate start to rise, do they combat with cutting rates? You see, like how things are shifting a little bit. They want to see the employment change coming lower, but they necessarily don't want the unemployment rate to kick higher. So that's why we've seen a mixed report, mixed change in the US dollar on Friday. That's something we need to pay attention to going into next week. So let's take a look at last week's review and take a look at some of the weekly performance. I mean, S&P was down the most, 4.55%, followed by the World Stock Index down 4.38%. So you can see everything is in that 4% range. The cryptos, I mean, they got slaughtered, 14.65%. So all those hopes and that we've seen this rally on, it's slowly unwinding here. And cryptos are now actually breaking lower. So the outlook again turning as if you were bullish on these two assets. I mean, I think now it's time to be a little bit more pessimistic than optimistic because we are breaking some key levels. Gold did strengthen 0.65% and oil down 4.2%. So it was pretty much a bloodbath across the board. Now let's take a look at the chart. Now looking at the chart, you can see the markets are breaking lower. The World Stock Index actually below that 200 moving average, which is again telling us that this is not a US phenomenon. This is something that we're seeing across the board. So things are looking a lot bearish. Let's take a look at percentage change in the currency markets. As you can see that these are big weeks when you see things in 2% percentile range or 0.5% or 1.5%. I mean, these are big moves. I mean, generally when we see things like 0.64 or anything below a 0.5% range is usually a smaller week. But I mean, take a look at that. It's not only just a Swiss franc that did gain 2.56%, but I mean, Australian dollar lost 2.48%. So that means that if you compare Aussie Swiss franc, that moved more than 5% that week. This is again a massive move, and these are the moves that you want to be capturing because that's really what pays off. It gives you the biggest reward risk ratio. So the big move there. And if you take a look at outside of that, the yen did rise 1.71%. And again, most of the gains really came on Friday. Even we had that dovish report from Bank of Japan. We're seeing a risk-off sentiment out there, and again, that's something has to do with a lot of the headlines out there that's causing that move. And now the dollar was a bit more on the weaker side compared to the yen and the Swiss franc, 0.79%. The euro that's actually managed to stay strong, so you can see that the dollar was really strong amongst the growth currencies, but outside of that, European currencies or yen currencies, the dollar was actually weaker. The CAD is down to 1.14%. Kiwi is down 0.88%. So growth currencies are really where we're seeing some hit here. And we have to really pay attention to the currencies like Aussie because it's breaking lower. And we also need to pay attention to CAD and see what's happening because we're seeing a sort of a change in that, the dollar versus the CAD, they're mostly moving together. This was a week where they totally deviated from each other. So something that we need to pay attention to. Now, looking at the crypto markets, I mean, look at those percentage changes. Bitcoin, 10%, Bitcoin Cash, and Ether, they're all around the 10% range. And Litecoin just got plummeted down to 20.71%. So really nowhere to paint a rosy picture. Everything was pretty bearish. So let's do a quick market analysis and talk about our upcoming week. So let's take a look at the chart here. So the S&P, the World Stock Index is down below the 20, 50, and the 200, and that's something we're seeing across the board. If you take a look at the crypto markets too, they're actually down much lower as well. So we are just kind of giving up all that gains that we saw in January, and that's something we're seeing in the equity markets as well, where we started off with a very nice note, and now we are back to where we started from. So this is again, if we continue to break lower, I mean, we can easily go test, the ranges below where we were, back in October. So the next week will be a crucial week. We expect it won't be a straight arrow down. With this probably some sort of rallies in between, but always think about where the gravity is. Right now, the gravity is going to get pulled towards the downside instead of the upside. So that's really where we need to be paying attention to. So the market outlook overall is at a -2 because we are now below the 20, the 50, and also now below the 200. So let's see what's on the schedule next week that can really cause or give us a little bit more boost to the moves that we are seeing. So the biggest one next week is the US CPI. So you can see that the CPI is expected to come lower. Again, if this comes out higher than expected, we can expect the dollar to just break out. If it comes out lower than expected, I think the dollar can sort of pair some of the gains that we have seen so far. Now, looking at the Wednesday, we had the PPI. So there's two numbers, the CPI and the PPI Tuesday and Wednesday. So these two will be important if you're taking a look at the US dollar. That will be something we need to pay attention to. But outside of that, I mean, there is the GDP report that we are seeing from New Zealand, which is, again, an important one. and taking a look at the Aussie employment report. So definitely next week is a week where you want to be active trading around these news events, and this should provide some good movements across the board. Kiwi was a bit more resilient last week, didn't really give up as much of the ground, but next week we'll see if the GDP numbers can really change that. We have the one sentiment next week, the ECB rate statement. They expected to raise rates by 0.5 percentage point, which again is expected. So the real movement comes in with their statement, with the press conference, when they come out and they talk about what's their outlook. And if their outlook is a little bit more on the dovish side, we can see the euro sell off on that news. So keep in mind that it's not about the rate hike. It's about the further sentiment, further the expectation for the rate hikes. So next week is a very busy week. I'd like to be active starting Tuesday, especially off that CPI numbers. So their next week outlooks, again, I think markets are likely heading lower, but in between, expecting to see some rallies, but those rallies are looking to be sold. Now, ECB is the one that I'll be looking at primarily for a news event. We'll be actually meeting live for this, so we'll be going through this and taking a look at it, see if we can get a good opportunity off of that. But outside of that, there's decent economic reports that we can be active around for good opportunities. So let's do a quick currency analysis and see what the charts are telling us. And let's start with the cryptos. So cryptos, let's start with the Bitcoin and the Bitcoin Cash. I mean, you can see that everything is sort of giving up these grounds. So this is where, where we started from in 2023. Everybody was definitely getting excited that things will break out, and then you can see that that's just kind of totally faded away. So the trend score and the velocity score, they all now turn bearish to a -2, which is again a clear signal for me to be on the short side instead of being on the long side. Same thing goes for Bitcoin Cash. They're all below these moving averages. We are seeing some sort of rally on the velocity score, but again, these rallies are what we want to be looking to short. Now, same thing goes with the Ethereum. Ethereum is just sitting at right at 200 moving average, but again, it's following the same trajectory, and they all have the same trend and the velocity score of a -2. And same thing goes to the Litecoin. I mean, this came down very hard down to this 200 moving average. So, like I said, after a big fall, what do you expect? You expect either for a base or you see a bear rally to really short into. So we are expecting not to be entering it here, but looking for a second stage entry where we're looking for some bounces early on to be selling on later on in the week. So let's take a look at currency market and see what that is telling us. Let's start with the US dollar. So US dollar, you can see if you were following US dollar since February, this thing has really done well. I mean, we were in a severe under pressure, and that has really reversed. We are now back above the 20 to 50 to 200 moving average. So should we be long the dollar or short the dollar? Well, the chart is telling us that we should be long the dollar, looking for pullbacks to be bought out. So again, the concept of where the gravity is, like things are moving more to the upside than to the downside. So expecting the dollar to maybe pull back early on in the week. But like I said, I will be looking at the Tuesday CPI numbers, and that could be the deciding factor of what the dollar is going to do. And that comes out weaker, we could expect the dollar to sort of pair gains. But if this comes out hotter, we can expect the dollar to continue higher. So in the shorter term, momentum is lower. In the trend turn, we are looking at trend sort of a +1. So we are getting a bit of a +1 and a -1. It's not really ready for me yet to make a trade on because we're getting mixed signals. Now, looking at the yen, I mean, look at that yen. I mean, we were actually a lot more weaker, and then you can see on Thursday and Friday, we see a nice little gain here. Could this gain continue to carry forward? I think the answer is really what the dollar is going to do, because if the dollar does well, that puts, we had the negative correlation between dollar and the yen. If the dollar does well, the yen likely to weaken. If the dollar weakens, I think then maybe yen can continue to stay stronger. So you can see that we have a +1 on trend score and a +2 on a velocity score. So that's telling me that I don't want to be right away jumping into the short side of the yen. Maybe you're looking at a mildly bullish. But you got to keep in mind is that there's still a lot of overhead resistance. This rally is coming off from this little downward trend. So we can expect some sort of pairing up these gains early into next week. So Swiss franc, this is a chart to kind of talk about, because let me take a look at how long this has been in this range for. Starting going back to September. So we're looking at a solid 5-6 months of this consolidation, and then boom, we got a breakout. So how do you want to trade the Swiss franc? I mean, right now, does it look extended? It does. Do I want to be buying right now? I think I want to see. I've seen a breakout. I would love to see sort of a reconfirmation and see if that continues higher. It definitely looks extended. I do want to be looking for either a base or a pullback to buy into. When we look at the momentum in the shorter term, momentum is very strong. So this is, again, not giving us any sort of pullback signals. It's still sitting at +3. So right now, I am still, if you miss that move, I would rather wait for some sort of pullback or base to buy into. But again, a very notable move here in the Swiss franc. Now, taking a look at the euro, on the other hand, euro did break out, but I mean, take a look at these tails. I mean, if you really had to compare euro versus Swiss franc seems just like a better buy compared to the euro. So you can see that euro velocity is not that strong. The trend has broken out, but I will give it a +1 instead of a +2. So the Swiss franc definitely leading that chart compared to the euro. Now, let's talk about pound, because pound overall, again, we have seen nice movement in this on Friday. But are these movements likely to have a further continuation? That's where you come down to your daily chart and see what the trend is telling us. So the trend is telling me that there is some sort of resistance in this area. We did test that resistance back here, and then we did kind of went nowhere after that. So I'm expecting some similar price action here. And again, if this breaks out above this area, then we can easily test that resistance. So something to kind of keep in mind, and looking for both case scenarios. But right now, it's not a strong buy or it's not a strong sell. So you got to keep in mind, these things are right in the middle. They're not aggressively bullish or aggressively bearish. Now, take a look at the Canadian dollar. Now, this is where the weakness was, especially on Friday, Thursday and Friday. This is where the big movements was. Now, if you take a look at the trend chart, we are now just approaching the support. So just like Swiss franc, is this ready to break out? Remember, the big movements happen when we get that big breakout confirmation. So at this point, I will be treating this as a range-bound price action, which means that it should hold that support and then start to rise. If this gives up that level, then we know that we are getting a breakout on our hand. But right now, it's too early to say this is a breakout. This is still a sideways range. Trend score is 0. I would adjust that outlook once we get a breakout confirmation. So keep that in mind. These are the things that could be potentially setting up for it. But again, in this long consolidation phases, this is where the turnarounds can happen as well. But if you take a look at outside of these, I mean, Australian dollar really is on the lead here to the downside. I mean, we are now at the December lows. But again, remember, things didn't look as bearish in December as it does look now. We started off on with a very nice move onto the upside, and we are slowly unraveling that move. The velocity is down to -3, trend is down to a -2, which means that I only want to trade this to the downside. There might be some sort of rallies in between, but those rallies are likely to be sold. And compare last currency is the Kiwi. Now, Kiwi looks a little bit more restrained compared to the Aussie. Again, Aussie had a catalyst last week with the RBA turning very dovish. Now, if the RBNZ is going to follow that suit, then we could expect the Kiwi to kind of move lower as well. But I mean, take a look at how big that move we saw since October, and since then it has really not gone anywhere. So keep an eye on the Aussie Kiwi cross pairing as well, because I mean, among those two, right now Aussie is the weaker one. If that stabilized and Kiwi started to weaken, I think they couldn't follow the suit here. But these are not aggressive. The trend score is a -1 and a velocity is a -1. So it's not really aggressively weak. So that's why we have to really not play that with an aggressive strategy. You want to play that with a milder strategy. So let's take a look at the scoring system here. So trend scores, the -2 and a +2 is the Aussie Swiss franc. So we'll take a look at the Aussie Swiss franc when we look at the charts. But outside of that, we have a lot of +1. We have a -1. So Aussie and Kiwi is really the only weaker one. CAD is at a 0, but that could move to a -1 if that breaks that support. But interestingly enough, dollar is not the only strong currency. We have the euro, we have the pound, we have the yen, and we have the Swiss franc. So something to keep in mind, this is not the same scenario as we had last year, where dollar was just gaining across the board and everything else was kind of weak. Right now, it's the opposite. So this is where you have to really keep your options open and not fall in the trap of this should happen and that should happen. You should always continue with what the market, what the chart is telling us. On the velocity score, you can see that the cryptos are all in a -2, but look at a -3 on an Aussie and a CAD. Kiwi was staying at a -1, but I'll be paying close attention to these. The dollar was at a -1, but look at that. It's pretty spread out the board here. I mean, all the European currencies are where the strength is, except the yen, which really surprised me after that big move late last week. Would that continue? Again, that's where you have to really consult it with the trend score. If the trend scores are telling us that it's a +2, then I think that's where we have a much more gravity towards the upside than the downside. And then there's some currencies that are sitting right in the middle, which means that we can look at it both sides. Euro and pound both were +1, but velocity-wise, they were mildly bullish. They were not aggressively bullish. But next week is going to be all about the dollar. Dollar can really shift these scores. You know, it's at a -1. You can easily jump to a +1 or +2 next week, especially if we get a hotter CPI report. So let's talk about possible trades and take a look at what we can expect and which chart looks the best for the next week. Now, looking at next week, let's just start with the equity markets here. You can see on Friday, we did see some bounce later towards the end of the day. Let's take a look at the futures market. We did see a bit of a bounce right at the end of this day, but overall you can see that the trend is moving lower. We might find some support at this area, but the expectation is now more for the downside, especially after last week's headlines. We could see some more continued pressure there. Now, let's talk about some of the key currency pairs that we really like here. So we looked at a scoring system and found that Swiss franc looks the best, Aussie looks the weakest. So let's take a look at Aussie Swiss franc. Now, looking at Aussie Swiss franc, we have now, look at that. Look at the plunge. I mean, we have broken below these levels and we are, heading into the territory that we were back in 2020. So this is a big movement here. So again, the question comes to is that, hey, this chart looks the best. Is this the time to be short? Well, this is where I would say that this thing has moved a lot. So I don't really like a short at this juncture right now. I would love to see some sort of bear rally, which means that we see some bounce like that, and then we fail that bounce. Again, that would be a better play. But at this point, it looks very extended to me. So personally, I would stay away from the Aussie Swiss franc short. I would rather look for a better entry. And I think that's really the question here. Which one looks like a better entry? I mean, Kiwi Swiss franc following that suit. And, this one also looks extended to me, but again, Aussie has been the more weakest. Let's take a look at Aussie Kiwi. Now, is there an opportunity in this pairing? I mean, you can see the Aussie Kiwi is now sort of unraveling this move here. We gave up this low that we established in mid-January. I think this one, if this continues to stay lower, will be a good indication that we should be short the Aussie. But we shouldn't be as aggressively short in the Kiwi because that's just telling us here. So I do like, if I want to get away from sort of that correlation, the positive correlation. I mean, these are the negatively correlated currencies, but again, whenever they deviate from that correlation, I mean, we get big moves. So I do like Aussie Kiwi. The question is, what time frame? You can see that these time frames, like things were fine until they start to move lower. But again, look at that. We had these bear rallies to short off. So, I mean, right now we are seeing sort of a extended move here. I would love to see sort of a rally into this range or maybe a base. So you got to be clear on the strategy that you want to use once you have established the direction. Now, CAD Swiss franc also had a big plunge lower. So all the Swiss francs questions that I have will look exactly the same. I mean, a massive break off of this support here. So right now looks extended. We need to see some sort of a rally to really jump or base to jump into. Now outside of that, so we'll be putting the Swiss franc on the sidelines here. So see what else looks the best. let's talk about dollar crosses. So dollar is the one that we'll be paying attention to next week. And let's talk about some of the key levels that the dollar is sitting at. The dollar CAD is testing the 138 level, which it tested back in September and October before it turned lower. So we are back at this level before that dollar took that big turn. So this is setting up a potential for a further breakout. If you want to be looking for a breakout strategy, I mean, this is the one that we need to be paying attention to. So right now on a 4-hour chart, you can see the momentum is very strong. We're above the 20 to 50. So as long as we stay above these moving averages, we don't want to be looking at, playing it more further to the short side, because again, we are at this level. So every time you're at these support resistance level, that's what you have to really decide. Is this a breakout or is this a point of reversal? Now, if you have a strong catalyst like last week when we had seen that big breakout in Swiss franc, I mean, it could happen in this one too. So again, if that happens, you get a confirmation. I mean, the resistance is right at that 139 area. So if you can get above that, we can expect some big moves. Now, same thing with the Aussie USD. We're look at the last 3 days. 3 out of 4 days, we got a big move down. We got a consolidation here. What is telling me that this is still a good contender to the downside. As long as it stay below this previous point, this is just making a little giant low base here. So I like this further to the downside. Now let's take a look at Kiwi against the dollar. Well, you can see that it did have a bounce on Friday, but I wouldn't hesitate to short it, especially if we get towards that moving average. You see, like once we have that direction, then we need to kind of use that direction and look for these little mini rallies that we get, like the one we got over here, and we use that as a shorting opportunity. Now, also, let's take a look at dollar yen. That's another one that I had a lot of questions for. What do you think of dollar yen? Because it was looking a lot bearish and we did have to pull back. So here's the thing. Now, if you take a look at the yen, I mean, we have seen no changes from Bank of Japan. This could be just a shorter term move and that get reversed. I mean, so far, this is outside of this downtrend that we were seeing. But remember, in the downtrend, how many times we saw bear rallies? We saw bear rallies, but they were all shorted. I mean, this could be another example where, we got a gravity towards the upside, is getting a pullback, but those pullbacks can easily be reversed. So I still like dollar yen to the upside, but I need to see some confirmation for that turn. Right now, it's finding support right at that 20-day moving average. So if that holds that level, then I can see for a continuation to the upside. But right now, on a 4-hour chart, it's just making this is just in a pullback mode right now. So I'll be looking at this on a Tuesday off of the CPI report, but not until then. So those are the currencies that are really making a big move. We'll be taking a look at EUR USD next week as well. I mean, you can see that you see a nice little range in this currency, but I mean, if you really like dollar onto the upside, there's still some currencies to give up that ground, but we just haven't seen that happen across the board. I mean, look at euro dollar. It did pull back from 110 to 105, jumping back a little bit. So there's still good patterns to kind of happen in these dollar crosses. But just like last week, dollar was not the one that was creating being the best move out there. I mean, take a look at dollar Swiss franc. We've seen a massive drop in dollar Swiss franc as well. So Swiss franc is really what took the lead last week, but that could shift next week, especially on a hotter CPI number. So on Tuesday, I think that will be the day to make that determination what happens. Also pay attention to the yields as well, because the last week the bond yields did pull back. You can see that the bond yield did pull back for this here. So this is just telling us or giving us a bit of a pullback signal for the US dollar. But if that get reversed or start to bounce a little bit, then we know that the dollar likely to be back on the stronger side. So a lot to focus on, going to next week. So in conclusion, next week, equities likely to remain bearish, but expect to sell those bear rallies. So I always get this question, do I play those bear rallies? A lot of times it's just better to stick with one direction and then just wait for those bear rallies to really use this as a selling opportunity. So I think at this point, you just have to be very cautious in the markets, focus on volatility and currency in play. Don't get married to an outlook. Like last week, dollar could have been the best currency, but again, it was a Swiss franc. It was other currency. It was the yen. So again, whenever you see something moving, that's really what you need to focus on. There were some plenty of great opportunities last week in those Swiss franc crosses, and I expect more opportunities next week as this market volatility continues to stay high. So focus on relative strength weakness and make sure you're keeping a close eye on what's moving and not much on, hey, this is what I think we should happen, because a lot of times, we don't see that. So looking at the schedule next week, we'll be again meeting on Thursday for the ECB press conference. But outside of that, it'll be just as usual schedule with the currency recaps every day, and we'll be putting out trade ideas. So thanks everyone for joining. If you have any questions, you can always reach out, Ankit, ANKIT at mavericktraining.com. Other than that, have a great rest of the weekend. I'll see you all next week. Cheers.